Hello, welcome back. We're at PDAC Day 2 and I'm with Paul Weibel, the CFO of 5E Advanced Materials. Paul, good to see you.
Thanks, appreciate the time to be here today.
No problem. So, look, first time on the show, so why don't you just give people a quick overview and then we'll dive in.
Yeah, so Chief Financial Officer, been with the company for about 3 years, was intimately involved with the redomiciliation from Australia to the Nasdaq. We have a boron and lithium project in Central Mojave, California, about halfway between Vegas and Los Angeles. Recently completed our final permitting milestones and will be up and running for production in the short term.
Good. I just saw the announcement a couple of, about a week ago. You're very close to production. You're on the cusp.
Correct.
Yeah.
So final authorization from the EPA came in right before the U.S. Thanksgiving holiday. Team prepared kind of in the month of December, and we commenced mining operations on New Year's Day.
Good.
So was a fantastic milestone for the company. Deposit was leached and mined in the 80s. You know, hundreds of tons of boric acid was produced back then. All the data that we've accumulated to date and what we're seeing in the PLS is aligns with historical data, and it's a little bit better, which is great. And so what we'll do here is, kick off. We're wrapping up. The final bit of construction is pretty much done, and they're starting to bump motors and enter that commissioning phase. And then in April, we're targeting first production.
Good. Look, obviously, this is going to be pumping out a lot of cash. It's a very robust project based on the economics that you've released so far. Before we dive into that, because obviously that's a real core part of why people should be looking at this, but I think take a step back on boron itself. It's not the same as gold or copper, where it's freely traded in an open market, and it's really easy to get your head around with spot prices available, etc. First of all, just tell me a little bit about the uses of boron, and let's go into a bit of the supply and demand fundamentals of it, if you don't mind.
Correct. So I draw the parallels to where lithium was like 15, 20 years ago, where you really had 3 or 4 global producers at Rockwood before Albemarle. The boron market is analogous to that today, right? Global supply is dominated by 2 entities, Imminent, which is a state-owned Turkish mining company, as well as U.S. Borax, which is a subsidiary of Rio.
Yep.
There's hundreds of lithium projects in the market landscape. There's really 6 known boron projects. One is permitted, which is us. And Rio is, they've been a 100-year-old mine. They've been operating for, over a century, and they're a very depleted resource or reserve base. And so, traditionally, boron goes into like 300 applications, and it's dominated by the glass, ceramics, fiberglass, insulation. But what you're seeing is a shift in dynamics, whereby you have decarbonization applications, permanent magnets, which is ferroboron, wind turbine blades, which is boric acid itself, as well as defense, same thing with permanent magnets and boron carbide, and ultimately the U.S. government wanting to secure supply of these critical minerals. And so because of the decarb applications as well as the defense, you see this really strong pull side demand story underpinning our asset. And so, with us coming to line with him, having that line of sight of near-term production, well, it's that opportunity to kind of, for once, break up the oligopoly.
Good. Okay. And just what is the demand fundamentals around this at the moment? And obviously you're talking about a lot of these new applications coming through. Could you just talk us a little bit, snapshot into the future, maybe out to 2030, 2050 if you really want to give, potentially maybe even close to 2030. How is the demand landscape looking? Is there enough supply out there from the Turkish and Rio Tinto to keep up?
Turkey has it's widely known they have the world's largest reserves, right?
Yep.
And Eddie's definitely a producer, of size. And we've done a lot of market research because it is an opaque market, right? Yeah. And you see a snippet in Rio's financials when they record their segment information, but that happens like twice a year.
Yeah.
And so, our analysis says the boron market is going to grow about 5.4% per year, where supply is only going to grow about 5.1%, which creates a deficit. And when you look at the pricing regression analysis and the model that we have kind of supporting the business, there's four factors. You have inflation, which is starting to cool. You have sulfuric acid as a commodity price. You have freight, and then you ultimately have utilization. And what is highly sensitive is ultimately what happens with utilization. When demand outpaces supply, prices rise, right? And so, yes, Eddie can add capacity, but it's not like a water hose where you just turn it on and off.
Yep.
It requires incremental capex and investment, and investment. And so, as more wind turbine blades come online, more lithium-ion batteries require permanent motors, there's going to be a pull-side demand story behind that.
Okay, perfect. Look, and also just to, I guess, not to complicate things too much, but there is actually a lithium side to this story as well, right?
Right.
So let's go back into the project. So where is it located, and what's the breakdown between the boron and the lithium that you'll be producing?
Yeah, so project is right in the central Mojave Desert. If you take Interstate 15, which you could start in San Diego and go all the way up to Salt Lake City, you'll hit Interstate 40, which will take you all the way across the U.S. We're about 30 miles east on Interstate 40, right off of historic Route 66, 2.5 miles from the highway. We sit alongside a major power transmission line. There's 3 natural gas transmission lines, and you have Port of LA, Long Beach, within a 2 hours drive. So infrastructure is all readily available, which is fantastic. What is modeled today is for every 90,000 tons of oil or gas it will produce, we'll produce about 1,000 tons of lithium carbonate process. So just from a technical perspective, the deposit was discovered in the 60s and is a colmonite deposit, which is ideal for extraction, right? And so we will mine via in-situ leaching. It'll be a very, very light acid solution, and that'll react aqueously downhole or pump that solution to surface, and whereby above ground will, from a processing perspective, it'll be crystallization, well known, tried and true. You'll drop out the boric acid first. You will then you'll have some deleterious elements such as aluminum, manganese, iron, all kind of well-known elements, but we'll drop them out through metal salts. After metal salts, we'll run through ion exchange, drop out a lithium chloride, and you have what's remaining in solution is calcite, right? And so when calcite reacts with sulfuric acid, it essentially precipitates out the gypsum and regenerates hydrochloric acid aqueously above ground, and that becomes your mining feedstock to go back to analyze some makeup water. So our method of mining is unique in that it's a closed loop process, and we're not putting a massive hole in the ground. Our method of mining is a 9-inch borehole that can be closed in P&A, 5-10 years from today.
And what does that do to costs? Because obviously you're not building a huge hole in the ground. So I guess in terms of how you're actually the capex of this thing and the stages that you're going to be going through, could you just sort of run us through how that works versus the economic return?
Yeah, and I think from an OpEx perspective, our biggest costs are going to be energy, right? And so it's fortunate we're right on 3 major natural gas transmission lines, and that'll essentially power our project, right? Your next would be your sulfuric acid, which is, it's one of the most widely used commodities today. So that, from a cost perspective, that they tend to not be in supply-demand deficits.
Yeah.
So, U.S. has abundance of natural gas as well as abundance of sulfuric acid. And so, our chemical plant is essentially, the capex, including the well field, is today forecasted at $350 million, but we think there are a lot of opportunities to further bring that down. What we'll do here is, in the short term, first production will ensue, and we're going to take that product to focus on customer qualification. We'll get the data we need, and we're going to kick off FEL 2 here this spring. And after FEL 2, we'll flip out, a technical report to PFS. The only thing really holding us back from the PFS is a capital estimate from our engineering firm of plus or minus 25%. Feel good with the estimate that's out there today and feel optimistic that we can improve.
Good, okay. So just talk us through the economics of the project moving forward, because and I wouldn't mind getting my head around about this qualification, because it's similar to other minerals like graphite or manganese or any others. That it sounds as though, let's touch on that first actually. So you'll be producing around 9,000. This will be, I assume, from April when you ramp up, right? So you'll be producing around 9,000 tons per year. That will be sent off for qualification to off-takers, and the idea over the next 12 months, I assume, will be to really just tie up and get these contracts.
Yeah, so you don't want to oversell commissioning, right?
Yep.
So far we've been fortunate that, the mining, there's been some learning curves, but nothing out of the, all's kind of gone as planned. And we're fortunate that we have a great team on site that's been able to execute. And what we'll do out of the gate is let's just get boric acid out the other side, lithium out the other side.
Yeah.
Right. Let's because you're gonna have gating items, you're gonna have blockages. We have clays down below. Clays will come above ground. And there's that commissioning process. Knock on wood goes well, but let's get through that and get boron out the other side. From there, once we have product, we're going to focus on quality.
Okay.
Right? Let's get to spec. We just put out an announcement whereby we took PLS that we mined in January, put it in totes, shipped it down to Louisiana, and on the bench through single crystallization, produced commercial grade product after the wash cycle. Okay. And so that was fantastic, right? It was, boron came out the other side.
Good.
And with different washing, on spec product. So we're going to do that at commercial scale. Yep. Out of the gate. Once we have that on spec product, it's well known, we have an LOI reported. There's other customers that we've been talking to. We're going to be looking to build out that sales channel, right? We need a sales and operating plan. We need to get customers qualified, and we can start to have usages kind of teed up for that commercial scale, and that'll all go into bankability when we start looking at the debt piece, right?
Okay.
And so from there, after we get to quality, we want to hit our rates, right? We'll start at 2 and then go from 2 to 9,
okay.
Right? And we want to, once we're at rates, we can start saying, okay, what customers have qualified, and then let's start actually monetizing and making sales okay. off that small scale facility. And because that'll help with just, cash credits back into
yep.
the operation of the small scale facility. And from there, you want to run that small scale facility as long as possible, because from just think we're going to 90, right? Going 9 to 90 is way better than going from 2 to 9 or 0 to 9.
Yeah, agree.
Right? And so you've started to open up the sales channels. You've built a marketing and a sales team that you're not just starting from scratch,
And do you need to get to that point also to the 9,000 and sustained production to sort of prove to the banks that this is a debt-worthy project, or can that be done before you get to that point?
No, I think it's, from the debt perspective, we need the offtake seat.
Yeah. Right?
That really helps. It also helps with us identifying what are the sales channels that our boric acid is going into, right? When we look, we've had conversations with the Munsport office, and they're very interested in our project. But what they want to know is, hey, the boric acid you're going to produce, how's that going to reduce scope 1 and scope 2 greenhouse gas emissions? It's a little bit chicken and egg, but you actually need to know we need to show that the boric acid we're producing is actually going into fiberglass, which is going into wind turbine blades, which then is going to generate X amount of wind turbines per year, which can reduce greenhouse gases by how much?
Brilliant.
And that's the qualification point where they're looking for. Some of the other companies out there that have qualified for LPO has been on, they have a lithium offtake agreement, but our lithium stream, while it's a meaningful byproduct credit to our financials, it's not quite enough to merit an offtake with an owner.
Okay. I think the LFO, you just said. Could you just go into a bit more detail in terms of what that is for those who are less familiar with it?
The LPO?
Yeah.
Yeah, so the Loan Programs Office is essentially, they have different programs where the DOE has a lot of dollars allocated where they can do really long-term friendly interest rate loans, which is a great tool for finance.
So this is Department of Energy, Department of Defense as well. Are they included in that?
So different groups,
okay.
Right? Little separation of church and state here, but you have multiple government funding channels that you can go after, right? DOE they have the Loan Programs Office. They also put out FOAs where, hey, if they want to investigate, this area or that area, and then you can apply,
okay.
Right? On the defense side, the traditional kind of, or what we see other companies going after the DPA Title III, right? And this was about 2.5 years ago. President Biden utilized the Defense Production Act, whereby you essentially can make grants into different mining companies to kind of shore up supply. And so if you look at, everyone looks at the critical minerals list, but each department within the U.S. government actually has their own unique list. And so the Defense Logistics Agency has their own list, and obviously Boron is on that.
Yeah.
And so from a defense perspective, as we've talked to the different agencies, boron is pervasive across defense applications, right? You need it in the permanent magnets, you need it in semiconductors. Carbide is armor, or known as Kevlar. And so it's one of those minerals that the sum of the parts is material to defense, and so hence why it's on their list.
Okay.
So we've had lots of good conversations with Department of Energy as well as Department of Defense, and we continue to actively pursue sources of funding within both departments.
And so that's down the line though, right? So that's when you want to get to your 90,000 tons per year. That you need to put in that 350 potential capex.
Yep.
As it stands at the moment, how much debt in the company right now? How much more cash is left in the company? Are you funded enough to get to where you need to?
We're funded to get through first production,
yep.
Right? CapEx has been spent.
Good.
Our burn continues to go down because we're no longer spending money on steel and construction.
Yep.
And we're every bit transitioning to an operating
good
company, right? Like, that, and we saw it firsthand as we built that small scale facility, that S-curve of the construction at the last bit gets expensive.
Yeah.
And that's where you have those cost overruns.
Yeah.
Right. And so from a capital structure, we did do the $60 million condo in August 2022. That's been restructured recently, which I think is a good thing. We brought in $18 million of fresh equity with that deal, and that's financed us to get into first production. And I think what we've outlined our game plan to the market, right? We said we're going to start on January 1. We started January 1. We knew we'd have a successful special proxy on January 12th. And now essentially we said it was production in the lab. Tech did that.
Good.
And so we've, listen, yes, we got a commission with bumping motors, but, knock on wood, like, first product's coming out of that crystallizer in April.
Good. Okay. And then let's just talk about, because what we haven't discussed is actually how much cash this is going to be spilling out down the line, right? So I think from the economics that you have released, there was around, about 2.4 billion post-tax, 8% NPV, right? Throughout the life of the mine, around 13 billion in revenue?
Yeah, and I think you have a 30-year mine life on the model, and I think what's interesting is that the resource still has a massive exploration target. We know where the deposit pinches on the northwest side, but it's completely open on the southeast.
Okay.
And so, I think that mine life, like, until we know where it's going to pinch, it's really open today.
Yeah.
So that's modeled economics today. And so it's, I think we'll be around for many years to come.
Good. Okay. And how does this look moving forward? I guess so. Like you were saying, you've got to qualify your products. You've got to ramp up to the 2,000, then to the 9,000. What sort of time frames? I know these things move around a little bit here and there, but at the moment, how's the next 12 months looking? When are you expecting to hit different milestones?
Yeah, I think so. First milestone is going to be first production, right? With targeting April. And then we will enter into the FEL 2 side of the business, right?
Yeah.
And so that's about a 5 to 6 month process. We announced that 4 would be our contracted to do the EPC. And out of the back of that, it's really, that's cost optimization process and drilling down to that CapEx estimate of plus or minus 25% and flipping that to a PFS.
Okay.
From there, you're looking at, on the back, after that FEL 2, you go into FEL 3 and the detailed design. And really then you're at an FID decision, right? And from there, you're about an 18-month build.
Yep.
So I think, the best part about this is, like, for the first time, I can at least see the sun setting on that equity door, because we had at one point a royalty on the project. That royalty is gone away.
Okay.
So that's a tool in our toolbox for financing. We have ultimately the government applications that are, in suit. That was included in our most recent release. I think there's meat on that bone for the first time,
Yep.
which is really good. And then I think you'll look at some of the debt. As you get into that PFS, you're really looking at the debt piece of the project. And if we've done our job and we've got an offtake agreement signed up, that debt piece starts to fall in line.
Good. And just break down for me, because I think in your investor presentation, I recommend people go and look at that. But it looked as though the assumptions at the moment, 25% of the capex would potentially come from royalty. Is that right? And then another 50% from cheaper debt from places like the DOE and Department of Defense.
You have U.S. Export-Import Bank.
Yeah.
Questionnaire has been submitted on our side, so we're kind of going back and forth, working those channels. And I think, you have different toggles, right, and levers that can be pulled. And I think we're looking at, okay, a royalties out there, right? So we can. There's no other royalties, right? We have the senior secured convertible note has a $420 million carve-out for project finance, at the OpCo level. And then, yes, equity markets are there, but I think we want to be opportunistic, right?
Yeah.
And so between the government funding, debt fund, project finance, royalty, and then, yes, equities, there, but we want to be mindful of our equity holders, and you have multiple levers that can be pulled here. And so I think, for the focus is on, for us, is let's hit a milestone.
Yep.
Well, let's execute, demonstrate, excellence, and then, assess one cost of capital against the other.
Good, but you'd probably say actually this next 12, 18 months, qualifying this product, getting up to that 9,000 is a huge year for you guys.
Massive, and I think each day gets better and better. And when I joined almost 3 years ago, I see the production reports, but that was in the 80s, right? And now we're seeing the data. We have a lab on site with an ICP. We're able to run the analytics real time. We have our standard operating procedures and see, all right, head grade is 5% on the sample, and it's like that is in line with the soil. We think, our assumption is through recyclability we'll get to 7%. Well, that's still very much in play. And each day, our team gets better. We get more confident, and we de-risk almost by the hour. And so we continue to get smarter. One of the things we're really interested in, and I have our geologist and environmental geologist and our petroleum engineer here, is how do you optimize that well field, right? The original mine plan was vertical wells, and so we should be taking pages out of the playbook of oil and gas and looking at horizontal wells and directional drilling, because drilling techniques are so much better today than they were in the 80s. See, and so like those are material OpEx improvements that we'll learn kind of as we go and build that into the future commercial.
Perfect. Paul, thank you for your time.
Yeah, pleasure.